Dear students, now we are discussing about some journal entries. Before going to do journal entries, we want to know what are the rules of debit and credit. So if you observe, there are two approaches while deciding debit or credit. There are two approaches. One is golden rule of accounting, the other one is modern approach. So let's see golden rule of accounting. In golden rule of accounting, there are three accounts called personal account, real account and nominal account. According to personal account, debit the receiver, credit the giver, and real account, debit what comes in, credit what goes out, and nominal account, debit all expenses and losses, credit all and incomes and gains. Now we'll see modern approach. In modern approach, there are five categories. What are that? See. So this modern approach also called US approach. Here I am giving a hint. Five categories based. AELIC. What is AELIC? A is asset, A is assets, E is expense, L means liability, I means income. It is also called revenue. C means capital. Let's see in detail about this. Assets and expenses. The rule is asset or expenses increase, debit, decrease, credit. Similarly, liabilities, incomes, capital. Increase, credit, decrease, debit. While passing journal entries, you can follow any approach, whether it is golden rule of approach or modern approach. Whatever approach you follow, the journal entry will be same. So we need not to worry what approach we are following. Okay, here we have a question. Question number 5 of TS Gravel Accountancy. Pass journal entries for the following transactions. So for this, what we supposed to do? What is the first journal entry we read? 2026 April 1st. Suresh is declared insolvent. Who is Suresh here? Who owe us? Suresh is a debtor who owe us. Received 50% of debt of 5,000. That means 50% value is 5,000. Balance not receivable. So what could be the entry? Here 50% we are receiving, no? So cash will be debit. Cash account debit. And remaining 50% not receivable. So we should debit bad debt account. The debtor became insolvent. That's why we are transferring to bad debt. Who is this fellow? Suresh. We write to Suresh. Account. Narration: being Suresh insolvent. Being Suresh insolvent. The amount will be cash we received 5,000. 50% of 50% of not 50% of debt he mentioned, not 50% of 5,000. 50% debt which is 5,000 means the other part also 5,000 only. So total amount total amount Suresh owes is 10,000. I repeat again, we didn't receive 50% of 5,000. They mentioned 50% of debt. The amount received is 5,000. That means remaining bad debt also 5,000 only. Don't forget. Next, April 2nd. 8,000 due from Ramesh is not recoverable. So nothing we are receiving. In first entry, we have seen that 50% we received, remaining 50% is bad debt. Now total amount is bad debt. So don't write cash account over here. So we write bad debt account debit to Ramesh account. Narration will be same, being Ramesh insolvent. So the amounts are 8,000 each. Next, April 3rd transaction. Sham, who owed 15,000, became insolvent and 50% is received from his estate. His estate means his properties. His estate means his properties. Out of 15,000, 50% only we received means 7,500 we received in cash. So remaining 7,000 become insolvent. So irrecoverable is called bad debts. Now what is the entry will we write? Cash account debit, bad debts account debit to Sham account. Narration: being Sham insolvent. The amount will be 7,500 cash, 7,500 bad debts, total 15,000. Last entry, April Fourth, received 10,000 in cash from Sohan for bad debts written off last year. We received means cash is coming. So cash is coming means cash is debit. So we write cash account. And from whom we receiving Sohan? But we should not write Sohan account. We should write bad debt recovered account only. Whenever bad debt recovered, don't mention the name of the person. Mention as bad debt recovered account. Why? Because earlier we wrote it as a bad debt. That's why earlier you wrote as a bad debt. Now cancellation entry. So being bad debts recovered. Being bad debts recovered. Amount is 10,000. Hope you understand the entry.